Okay, so good afternoon, everyone, esteemed guests and CFP professionals community. Welcome to the second episode of From Pockets to Portfolios, CEO's Personal Money Management Journeys. I'm thrilled to host you again, Saniya Chawan, Manager of Certification and Engagement at FPSB India. Today, we have a truly remarkable session lined up for you as we delve into the world of financial wisdom with our distinguished guest speaker, Sumit Rai, the MD and CEO of Edelweiss Tokio Life Insurance. With over 25 years of experience in leadership roles, he has built a strong leadership team, expanded distribution networks, and introduced innovative products. From spearheading strategic directions at Edelweiss Tokyo Life to pioneering a multi-challenge distribution network and introducing innovative products under the hashtag Zindagi Unlimited initiative. His journey is nothing short of inspiring. Previously, Sumit was a key member of the founding team at Max Life, contributing to its growth into one of the India's largest life insurance companies. He has also held strategic roles at Bank of America and ABN AMRO Bank. Also with us today, we have our very own interviewer, Arun Thukral, a CFP professional and CPAC chairman at FPSB India. With his expertise and guidance, I'm sure we'll be able to unravel the depths of Sumit's experiences in shaping the landscape of his personal financial journey. In this session, attendees will gain insights from Sumit Rai's leadership experience. They'll explore strategies and innovation in insurance, leveraging his industry expertise. And additionally, Sumit will share his thoughts on the future of financial planning, providing valuable perspectives on this evolving profession. I encourage each of you to actively engage, ask questions, and absorb the wealth of knowledge that Sumit is generously here for us today in the last 15 minutes for the Q&A session. So please drop in your questions in the Q&A tab below, and we'll try our best to answer them all. So over to you, Arun sir.
Thank you. Thank you, Saniya, and welcome, Sumit, once again.
Thank you, Arun. Thank you so much for having me here.
Yeah. Thank you for sparing time for us. And I am Arun Thukral. I have to tell today again because my name is spelled wrongly, and I think she will correct it.
Yeah.
And welcome everyone in the audience. So I think, Sumit, this series we started because, as we all know, that personal money management journeys are very, very important to achieve long-term goals for everyone. Whether you are starting your career, whether you are a seasoned professional, whether you are a common man or a CEO. I think all of us have started our own journeys. So as a CEO, you manage a large empire and you deal in crores of rupees, thousands of crores. But today you are obviously on hot seat. So I would start with asking your relationship with money and rewind and go to your early career days. How the journey started, how it was at that point of time, and then how you progressed.
Like I said, Arun, first of all, thank you very much for having me here. Always a pleasure to be associated with FPSB and the CFP community. And we'll talk about it, I think, a little bit later about how I believe financial planning is very poorly understood and how this country, given the poor levels of financial literacy in the country, needs a lot of financial planners to help the country, help people invest better. But going back to my early journey, Arun, I come from a very typical middle-class family. My father was in service. A lot of the younger generation may not resonate with it so much, but people of our generation will remember those days when, money was never taken for granted. Money was always a scarce commodity. If you wanted something at the month end, you were told to wait because agli tak khayegi to milega types was the life that I think a lot of us have lived. And my initiation in that sense was no different from a lot of other people of our generation. And I don't think it changed a lot even in early career. I remember my first job, I got married, I moved to Delhi. We were living in Noida. 50% of the money used to go for rent. The last few weeks or the last few days of the last week meant that you could not even afford to put, petrol in your bike, and you would travel by bus and all of that. So one had lived through all of that. But those are indeed memorable days because of what it taught you about how to manage money, managing a budget, living within your budget, not getting leveraged unduly to the extent that you could. All of those are early lessons that one learned from there. As far as initiation into financial savings goes, I think again, I think things change over generations. But in our generation, I think for most of us, our first initiation was your parents would buy a life insurance policy in your name, and they would say, "Ye isse paisa bachane ka karo." So that is how my journey started. My dad bought a life insurance policy when I must have been 16, 17 or something like that. That money came in some 20 years later. It was such a puny amount of money that one wondered what will we do with it. That's okay. So that's how it started. Um, Early days, never too much money in the pocket, but always tried to put aside a little bit of money. In those days, it had a lot more to do with saving for tax purposes and all that. So a lot of PPF, um, NSC and so on. And effectively, I think serious investment started for me when I was a little bit older, maybe late 20s, early 30s. I also did the one other thing that I think most MBA students do because we think we are dons when we come out of business school. And I went and invested in some stocks, which in those days in the early 90s was always typically your sub broker will tell you, sir, ye hot tip hai, ye le lo, and then I burnt a lot of money in the mid 90s in that. So lots of interesting memories associated with money. But yes, my serious saving journey started in the early 2000s. Reasonably spread out portfolio. Property used to be hot in those days, so you did a little bit of speculation here and there, and but a lot of I started saving in mutual funds in those early days of the mutual fund industry, and I've been putting away money in various things over a period of time. Uh, the only thing that I've learned is do whatever you want, just keep putting money aside. Otherwise, you will never have the discipline to do it. Somebody, a very wise man, taught me once: pay yourself first. And paying for yourself first meant you get your salary, you take out some money from it, which is to go into your savings account or your investment account, and put it away so that you won't touch it. Because otherwise, being the kind of people that we are, we would spend it all. So paying yourself first was the first financial lesson that I remember somebody having taught me, and that has borne fruit over the years. Saving habits obviously change over the year. Your capacity, capability for investments, your understanding of various forms of investments all change, and so that journey has been ongoing. Uh, Continue to learn every day. Continue to understand about new instruments every day. As you mentioned, as a life insurance professional, actually we are in the business of managing money professionally for people, and in that journey one has learned a lot. One has learned not just what to do, but one has also along the way learned what not to do. So it's been a very interesting journey. Can't compress it in even a 1 hour interview, if you ask me, quite honestly.
Great, great. I think beautifully explained. And the story looks similar, I think, the people of our generations. And I think that gives an impression to everyone that, yeah, you also started like a common man and you also had your own mistakes. You also speculated or maybe bought few stocks on the tips. And I think all of us have done that. And over a period of time, you said you were like, you learned pay yourself first and all those things. But is there anything comes to your mind that you were struggling or very challenging time that something has gone wrong in your investment journey in the early career? Like for me, I lost money in stocks once in 2000, that tech crash. So do you think any such thing happened to you and any learning from that particular incident? Anything comes to your mind?
No, thankfully that never happened to me, Arun. But I must share one other episode, which was actually for a period of time pretty stressful. I used to be a part of Bank of America and in the loans team, and ours was a compensation which was very heavily dependent on incentives that we earned quarter to quarter. I was a good performer, made a lot of incentive every quarter, almost took the incentive for granted. And then I went and splurged on a large car loan and bought a, which in those days was quite a luxury. I bought an esteemed when I was 27 years old. Maruti esteemed used to be the biggest thing. Like a true Punjabi boy, I was always flamboyant and favored the flashy things in life. So I bought one. It was very good. And then one fine day, Bank of America announced its decision to close its operation in India or sell its operations in India, and all incentives were stopped. And I was in a deep hole because I did not have the money to pay the installments and everything. So for about a year, my my debts on my credit card and everything else soared. And it took me nearly a year and a half to be able to fix all of that. I converted my credit card loans into a personal loan at a lower interest rate. Literally lived hand to mouth for a year because of that leverage that I had created for myself. Taught me a very important lesson very early life. हिंदी में कहते हैं जितनी चादर है उतना पैर फैलाओ. So that's a lesson that I learned pretty early in life. Along the way, sure, there have been other episodes where one has made mistakes, one has lost money. But I think that's part and parcel of the investment game. You have to be prepared for some bit of that. And you have to be clear about what is your risk appetite and how much you want to be able to risk money, and be comfortable with the fact that you might lose some of it if you're going into aggressive bets. So that's also a lesson that I've learned along the way. Be careful about where you put your money and knowing about when you might need money and so on and so forth. Classical asset allocation, as professionals like to call it, asset allocation, time allocation. But thankfully on investment side, I've never really had too much stress. But yeah, borrowing too much and then not being able to service it is extremely stressful.
Over leverage. I think that is well said. You should not, that same thing that you said, जितनी चादर है उतना ही पैर फैलाइए.
Bilkul.
And before I move to insurance, which is your domain, because I learned insurance from you, but you met me quite late in life, because I also did the tax saving and now got some petty amount when I left my job. So about other asset classes, let's say gold or real estate, what is your view on that, and whether you also invested all along or maybe invested
So,
now?
like I said, uh, I first started making some surplus money, if I might call it that, around the late 90s, early 2000. And that was also the time when you will recall the property business was booming, and you could flip properties and double your money in 60 days and 80 days and 90 days. And one has done that, and then got stuck with something when I got it on the wrong end of the cycle. Then I got stuck with something for a fairly long time, but that's all right. So if I look at my overall portfolio over a period of time, in the early days, it was a very lopsided portfolio, lots of real estate in it, not enough equity. Through most of my life, I've never really had too much debt on my portfolio. I'm a very, very optimistic guy. I always believe the future is very bright, and so I've always invested on the stock side. Partly because of compliance reasons, I can invest in stocks directly. So almost all my investments are either through mutual funds or are through AIFs. That true. Gold, again, is something that I have never really done. A lot of these are defensive, and I'm not a defensive person by mindset. So the defensive allocation in my portfolio has been very, very low right through the years. The only time I go into debt is when I know I'm going to need money in the short term over the next year, 1.5 years. And then I don't want the volatility that will come with equity. So that is the only time I've invested when there are specific goals in mind for which I know that I will need money in a certain period of time. Then I've used debt. So real estate, yes, always. At any given point of time, about 15 to 20% of my portfolio is real estate. The rest of it is, like I said, mostly all equity. My equity debt through using, mutual fund tools like BAFs and others, I have about a 70-30 equity debt portfolio, and I like to keep it about that level. Like I said, I believe I have a long innings to play still, a long time frame of when I might need my money. So if I know I have time, then in my personal view, it's best invested in equities.
Yeah, and I think the viewers would also want to know. I think this question get asked every now and then. Any trust with the cryptocurrencies and similar, some arts or wine or all those kind of asset classes? or you stay away, or anything? Any view on that? Or maybe that's
Crypto
for
is
the
for my next
next.
generation. My son invests in crypto. I don't. I don't.
Okay. So we are aligned.
I-
Yeah.
so in my view, my investment philosophy, Arun, is actually quite simple. I only invest in something if I understand it. And if I have an innate understanding of what lies in creating value in that particular asset class. If I can understand it, then I will invest in it. And if I don't understand it, you can try and do whatever. I will not invest in it because I don't want to get into something that I fully don't understand. Therefore, things like art, things like wine. I have a very good friend who's one of the world's largest collector of whiskeys, for example. Now, I can't collect whiskey. I would much rather drink whiskey than collect it, right? So,
Makes sense.
so I have no. So some of these more innovative ideas, no, I haven't been. Uh, if you look at recent trends, new things that I have put in money, for example, REITs is something that I have money in. These kind of things, which I understand fundamentally, I'm comfortable with. What I don't understand, I stay away from. Because that is where, when you don't understand something and you go with the herd, because everybody wants to do crypto. Now, I can look at Bitcoin today and say, shit, man, it's $70,000 and I wish I had put in money. But it's okay. I don't regret it because I don't understand it, and if I don't understand, I'm better off without it.
Okay, fair point, fair point. Because as you said, we can do little bit of innovation. Instead of real estate, we get into REITs, or maybe buying gold directly. We get into
Correct.
SGBs and all, because we understand.
I
That is
can buy
what
a
I think
gold bond
I
if I want some exposure to gold.
yeah, yeah. So I think that much we have changed, but not to that extent.
Yeah.
Maybe trying to understand a little bit. So I agree with you. I am in your camp in this. But anyway, I think for viewers, I wanted to ask this question. Okay, so now getting into your domain, insurance. So first is like, when we talk about insurance, it is very difficult to sell insurance. Maybe people don't want to discuss that when you die, who will get money, how much. This discussion is normally on not on the dinner table and all.
Yeah.
So how difficult it is for you to sell insurance, and how important it is for customers to get into this, to buy this. What are the challenges basically for you as a CEO?
So fundamentally, if you ask me, Arun, I think what has happened over a period of time is that insurance started out, at least in our country, as a tool of tax saving. Primarily, everybody bought insurance because everybody wanted to save tax. And my somebody in my neighborhood or somebody in my relatives was an agent of LIC, and that's how we ended up buying, and so on and so forth. I don't think too many of us put too much mind to what we were buying, as long as we were being able to save some tax. And I think from that point, things have changed quite a bit. I think the CFP community, the financial planning community, has done a great job in educating people about the need for having protection, first and foremost, as a baseline of your investment pyramid. Uh, I do believe very strongly that everybody should be insured for anywhere between 10 to 20 times of your annual income. That's the minimum, and that you should again reallocate that as you get older, as your income gets better, and keep, just as you would review any other portfolio, you should review your insurance portfolio as well. I think the other thing that I recommend to everybody is health insurance, because I think with health inflation being what it is and how expensive healthcare has become, uh, health or about a bad health can wipe out all your savings without before you even realize it. Right. So I think those are two things that I recommend to everybody. Uh, it's selling insurance, like you said, is not easy in India. Uh, However, there is a greater awareness today. Uh, Also, what has happened over a period of time is that there's been a fair bit of innovation on the insurance side in terms of products that has happened. So, for example, today, you can buy a long-term life insurance policy which will guarantee you around 7% for 20 years, and there are very few products out there that will actually do something like that. And these are well hedged portfolios, and also the risk of default actually, to my mind, doesn't exist. And even if it does exist, it's very, very minimal. So I think the entire ecosystem in insurance, especially in life insurance, even on the saving side. So if you look at some of the ULIPs, they're very, very low cost. Some ULIPs today on cost could actually manage some of the active managed funds and so on and so forth. So I don't think ULIPs a lot of people understand, but I think of ULIPs almost like a fund of funds, because I can switch between debt, equity, and whatever without having to pay tax on it. So if you have a ULIP policy well managed, and some of the fund managers have excellent records even in the ULIP side now, there are many advantages. I don't think people still fully understand all of those advantages, but the mindset has changed. In my 25 years of being in this business, 24 years of being in this business, I've seen a big mindset change. I remember the early days. If I told somebody I was in the life insurance business, if I was at a social event at a party and I said मैं life insurance करता हूँ, people would generally, move away from you कि अभी ये बेचना शुरू कर देगा types. To today, when I think a lot of people actually directly approach to say what should we do, how should we approach life insurance and all that, I think awareness and therefore attitudes have changed significantly over the years. It's still a difficult business and you can't get away from it. It is a difficult business. It is a business where if you initiate 10 contacts, maybe you will get 1 or 2 sales. So the ratio of success is still low. It's a hard business. But I think awareness is changing. It's changing quite fast, and attitudes therefore are also changing very significantly. In my mind, personally, I think the next few years are good to be in the life insurance business, both from a customer perspective as well as from a distributor perspective.
Great. I think I want some more elaboration on the point you said, you live, and then there are people, sometimes there are mis-selling. So maybe you would be facing this kind of scenario also. Maybe someone would do wrong things. And again, sometimes mutual fund industry, they'd say, no, insurance mat kariye, aapko investment karna hai. So people sometimes mix. If you want to buy investment, you sometimes buy insurance, and sometimes you want to get insurance and somebody says you get only 7 or 8%, better to buy a mutual fund. So I think this debate always continues. So how you handle this? Because you must be getting this kind of comment, sometimes some wrongdoing by someone in the industry. How you handle this part?
So you're right, and let me break it up into 2 pieces. Mis-selling is real, and mis-selling gives our industry a bad name. And therefore, a lot of our effort is towards consistently trying to eliminate this mis-sell. Unfortunately, the problem is that mis-selling of frauds in our country are widespread. I mentioned earlier, financial literacy is low. It's easy to fool people into doing things that they should not be doing. Forget life insurance. Look at the amount of fraud that's happening on UPI right now. It's just crazy. Now, you can't stop using UPI just because there's a lot of fraud, right? Nobody's stopping using UPI. Similarly, I don't think just because there are episodes of mis-selling in the industry, that the industry should be seen as one as which is only involved in mis-selling. As a company, we have a clear standard. If we find a case of mis-selling which is genuine and where somebody has been wrongfully, we will not take any time to cancel the case. So that's part of what we do. But like I said, also, I think the other thing that has changed is that product structures and product innovation have undergone a sea change. So in terms of what customers can look for from life insurance product today, it is very different. So going back to the tulip example that you were talking about, if you looked at today, if you were, for example, in a mutual fund, right, and you wanted to switch from an equity fund to a debt fund because you think that equity is going to go down and you want to now save the gains that you have, you will pay some short-term tax or long-term tax or whatever it is. You will pay capital gains and all that. But you could do the same thing in a ULIP policy and not pay any tax because it's one product. You can just switch and you can conserve, and you can do it any number of times, right? I have known people, Arun, very, very smart people who have used this feature to create so much wealth for themselves by being just switching and avoiding these extra charges that come from capital gains and other things in the mutual fund business, or even in buying stocks directly or buying bonds. So again, there is a mindset. You're right. A lot of people believe कि नहीं मैं तो life insurance is only for protection. इसको mix नहीं करूँगा. I think as good planners, we need to study the products and then see the competitive advantages. Let's not get carried away by what the common wisdom is, because the people who truly make money are the people who go away from common wisdom and are able to see things for themselves. So while I understand common wisdom and while I understand that there is some basis for common wisdom, I think as people who are advising others, it is also our job to not just get carried away by common wisdom, but to study and analyze and break down products for ourselves and see how they best suit our customers. I think that's very important. Some people may not need life insurance, some people may not need ULIPs. I understand, I agree, it's fine. We should not be selling to them. But there are others whose portfolios could benefit. And we should not, just because we have a belief that it is not the right thing to do, deny them from those benefits.
Great. I think great explanation. And the role of financial planners in all this, and maybe some of the financial planner or advisor, they find it very difficult to sell insurance, and it is easier to sell a mutual fund. So what is your advice to them? Obviously, one, you would say that insurance may give them slightly better commission, but how to motivate them to get more people into this industry, and how, as a company, as a CEO, you would support them if somebody wants to get into insurance selling, or maybe getting insurance to the people.
So, I think, and I am one of those who cleared a couple of groups of CFP before professional engagements kept me from going further. तो एक वो मेरी तमन्ना है वो रह गई है financial planner बनने की.
That now you have told us, we will make sure that you complete that.
I just dug a hole for myself. I can see that.
Great.
But having said that, I've personally used a CFP for nearly 15 years. He was one of the earliest batches of CFP. He's been invaluable in my journey as I put together various goals and said, where do I go from there? And to be fair, this gentleman has also brought to my notice financial insurance products, life insurance, knowing fully well that I work for a life insurance company, knowing fully well that I also have a policy about not buying a policy from a company other than my own. He would still diligently, if he saw something that was interesting and that fit in well with the larger goals, he would still bring it to the table, and I did end up buying a couple of them. I firmly believe that financial planners have an onus and a responsibility to bring the right advice to the table. The right advice, to my mind, therefore, apart from the standard bit of term insurance, and I understand that term insurance myself is the bedrock of any proper financial planning. I don't think you can do financial planning without some degree of exposure to term. There are other products which serve particular purposes. You should at least know about that. The one thing I don't expect financial planners to do is to push products. I don't think that's their intent, and I don't think that's what they should be doing. But it is to bring forth the benefits of a product if it is the right thing for a customer. And good financial planners, I don't think ever need to sell, because they have enough of a relationship and trust with the customer, where customers will accept whatever advice they have. I have been doing that for a fairly long period of time. Now I'm a reasonably educated, familiar with financial markets kind of a person. Even then, I listen a lot to my financial planner. So for most of people, and by the way, my other realization is people who are not in financial services, even very senior people, CEOs, struggle to come to terms with even basic financial concepts. And they don't understand financial markets the way you would expect them to. And therefore, they need this help always. And I think it is our duty to bring in the right product. And frankly, if you really believe that something is not right for the customer for you to do with your customer, you should not. But it should come from a position of fact and not from a position of belief. If you've got your facts ready, you think it's not the right thing for the customer, for sure, please don't advise. But make sure you're aware of the facts first before you come to that belief. That's the limited recommendation I make. And if you operate with that, I think customers will always buy. Because if you have the right interest at heart, there is no reason for them to not buy.
Great answer again. So another question was that, okay, when you talk about products, you have spoken about product innovation. So at your company, and so how do you look at innovation? How do you look at getting new product? Do you have products for each generation, maybe Gen Z or midlife or somebody senior? How you handle that part? And again, because you are in an industry, so at our time there was only LIC. Now there are a whole lot of companies. There are bank-backed insurance companies, and then there are companies like yours. So how do you handle this competition? How do you innovate? A little bit on that.
So I think fundamentally, my belief, Arun, is that innovation comes out of understanding your customer. If you don't understand your customer, you cannot innovate. You cannot innovate sitting on the sixth floor in a building in Bombay, right? Or if you're luckier, you might be sitting on the 60th floor, wherever you are, right? I don't think innovation happens on those floors. Innovation happens when you are out there meeting people, understanding, seeing them how they live their life, and then seeing what is it that I can do that can help make that life better. I don't think innovation can happen without that. So let me give you a small example of something that we did a few years ago. One of the things that we realized was that when people buy life insurance, especially term, where there is a lot of coverage, if something happens to the family, right? If something happens to the life insured, what happens to the people after that? Now there is only one. Let's say it's a family of four, right? Now, let's say something happened to the father. Now the mother is the only person. I don't think we have ever had a situation where anybody thought about saying, what happens if something happens to the mother now? So one of the things that we created was a spouse benefit. So this is not joint life now; it's a spouse benefit, which said that if something was to happen to the primary insured, the spouse would have a right. The spouse would get automatic coverage for a very little premium. So the premium increase was, let's say, 1%, right? If you were going to pay 100 rupees earlier, now for this benefit you will pay 101. But for this 101, you will get as much as 50% of the coverage of the original life. This people really liked, and it's sold, right? It comes from the purpose of knowing कि ये एक जरूरत बन जाती है after a while that your customer will need you know, the next person in the family would also need coverage because that is important. So those are the things we've just done. For example, a product that covers 3 generations. Okay, so it starts with the parents to the children and then to the grandchildren, and we've tried to cover what is called the life's journey across these 3 generations for people. So it should come from deep insight. It should come from saying what is it the customer need, what do they look for, why are they putting money into a product, and then seeing whether you can fulfill some of those aspirations. It's not an easy journey. You always get a lot of failures also. There are things that you think you know or insights that you have, and then those insights don't translate into ground reality. It is a fact of our life that this happens. But innovation primarily will happen if you are willing to step out of your office and if you're willing to step into the lives of your consumers and see how those lives are getting impacted and what can you do for some of those.
Great. So before we get into Q&A, maybe some last words. Anything for financial planners who want to get into this journey? How are you going to support? Maybe as a spokesperson of insurance industry, let's say, what is your advice to people who want to get into this, who have not done this so far, or maybe not aware of so many things about the product, the underwriting, the risk management? How do you train them? So anything on that, if you have something in mind. It's a message to the community, basically.
So I think, and by the way, I believe strongly in self-study. I believe strongly in educating oneself. I believe strongly in keeping oneself abreast. I said earlier, I don't understand crypto. That's not quite true. I understand a fair bit of crypto. It's just that I don't feel comfortable with an asset and for which there is no underlying pinning for why that asset should perform in a certain way, right? So if I don't understand that, then I won't invest. But I do understand crypto a fair bit. Not because somebody's taught me, because I've made the effort to go into that. I think it's the same thing. Every time you get into a new product category, you have to spend some time studying it. There's more than enough material which is now available on the internet. Of course, if you want more, you can always walk into one of the life insurance company's office. You can walk into one of Edelweiss Tokio Life's offices. We have trainers in every office who are happy to kind of sit with you and take you through products if that's what you want. Obviously, I'm sure a lot of people who are on the group today would have heard about, just as let's say there's the AMFI training for mutual funds, there's also the IRDA licensing which is required for selling life insurance, and usually that is reasonably robust. especially for people who come from financial background like CFPs, that training is more than enough for them to understand well. Uh, Insurance products in general don't tend to be too complicated. They're at the end of the day, they're just cash flow structurings. That's what a life insurance product is. It's a structure of cash flow. And most financial planners or CFPs understand it very, very well. I've seen it personally. So I don't think it's as complicated. I think it's just about putting in a little bit of effort in familiarizing yourself uh, and starting from there. The only recommendation that I would do is, and it's something that you mentioned earlier, don't do it for commission. Commission is not the reason you should sell life insurance. You should sell life insurance if you think your customer's portfolio needs an exposure to that kind of a product. I am a firm believer in saying that a lot of people do sell life insurance for commission. I don't have anything against it, but I still say that give what is the right product to the customer. The earnings that you will make in commissions over a lifetime from a customer for whom you have sold right will more than surpass anything that you will do by suggesting the wrong product just for high commissions. So commissions should not be the criteria for how somebody should recommend. Product suitability, appropriateness is, to my mind, the right criteria for how somebody should look at suggesting products. For that, a certain degree of knowledge, CFPs, like I said, it's finally at the end of the day, structuring of financial cash flows. CFPs understand it far better than most people. It shouldn't be a problem at all. And wherever there is a problem, like I said, most life insurance companies have reasonably well-trained people and trainers in offices. You can always consult them.
Great. I think very well explained, and I think you reassured everyone that so if they are getting into this, they are doing a larger purpose, a holistic part of the financial planning, not for commission.
Absolutely.
So maybe the time for questions now, Saniya. Yeah, Saniya, we can take questions now. Are you on mute?
And I think you're in
I'm so
good.
sorry for prompting me that.
You have to unmute.
Thank you so much, sir. That was indeed very
Yeah.
inspiring. And I could connect with you on a few things as well. That my dad is a development officer in LIC. So he heads.
So I have somebody else who's also from the life insurance platform.
Great. That's great. Yeah.
Yes,
So
so
there is
he
an
resonates
endorsement
with
right
your
here.
thoughts a
Yeah.
lot.
Great.
I mean, when he talks to his agents, like I've seen it since my childhood. So I see these people coming to my place and the way he used to groom them. So this is the same thing that I used to hear from him, that, mis-selling and commission and all these things are just secondary in life. What you will earn is, for lifetime, you'll have families that are connected with you and not just one that you own. There's hundreds of families that you're connected to and, providing this service to. So it is a noble profession, I
My
agree.
belief, and thank you for bringing that up. I think one of the most profound experiences that I've had in life is when I've had to go out and give a claim check to a family. And that is more service that anybody can do. I have seen families, and for all the bad name that insurance gets, I have seen families who've survived on insurance money. I know CEOs today who possibly wouldn't have been able to study if their father or mother hadn't bought a life insurance policy when their parents passed away. So I know people like that personally. And I think it's very easy to foo-foo something away without understanding the full benefits. But just handing out one claim and seeing how it impacts a family's future, it's simply the most profound experience that a person can get. So absolutely, I would completely agree with the father here. It's a blessed industry to be in. I've been here 25
Yes,
years because I think uh, just the amount of goodness that you can create if you do it the right way is just phenomenal.
correct. Yeah, totally. So,
Great.
Arun
Great.
sir, we'll move on to the questions.
Yeah, please. Yes.
I do have one here from Anurag. What advice would you like to share to the consumer so that one should not get stuck to the policy which he or she never wanted to purchase? So this is in respect to the mis-selling that is happening.
So, thank you, Anurag, for asking that question because it's something that really bothers me. You know, almost as a standard policy, every insurer today has a verification call policy. So, it's either a video verification or a telephone call. I think a lot of time, if somebody tells you that there is a call that will come and you will not get this benefit if you say no and all that, to me, it's the biggest red flag. If And what I find so amazing and how people can be so gullible is that somebody will tell them, I will get you a loan. They will give you a call for a policy. Just say yes to everything that they tell you. Don't say no to anything, and then I will get you the loan. And I'm requesting everybody. This is utter nonsense. This is absolute nonsense. We try and do these calls. And by the way, I must say, by doing these calls, I think we eliminate about 85-90% of the mis-selling that does happen because people do catch on, right? And that is why, if you look at the industry overall, the grievance level have come down over the period of years, significantly from where it used to be a few years ago. But the fact also is that the mis-sellers, the so-called bad apples, are always looking for new ways and new ways to food. And we are always playing catch up. We are always trying to figure out अब किसको कैसे बेवकूफ बनाया इसको कैसे रोका जाए, right? And so it's a very sad state of affairs. It's like, and it's happening across. I think insurance is just one part of it. Just the other day, I got a call. And I picked up the call, and it was a very professional sounding IVR. That said, this is from the telecom department. Your phone is going to get deregistered. Please press 1 to figure out more. And it was a complete hooks call. They wanted me to transfer some money for a bill that had not been paid and all that shit. So all of this is completely evolving at such an amazing pace. There is so much innovation that is going in creating hooks, and so much innovation that is happening in creating frauds. Ordinary people like us find it very hard to just keep up with what is going on.
And you must have seen that Jamtara on Netflix. There is some. So this is happening all over. Yeah, correct. Whether it is
But I think in our
insurance,
company, we have a once a month open house where we just invite everybody to say, have you seen some new way of fraud that is happening? Please come and share with us so that we can try and stop it. Right?
You have to be on top of that.
Yes.
So
Yes.
to my mind, I think, like I said, it's an ongoing journey. Some of the most simple ways of mis-selling have been eliminated, but new forms keep emerging and you keep fighting that battle. I don't know. Sometimes I wonder if it reflects on the moral mindset of our country in general. We seem to have more fraud than almost anywhere else in the world, especially petty fraud. It's quite amazing. But it is what it is. You can't do too much about it. And by the way, yeah, I can see Anurag's comment, and fake videos are the latest things. Deep fakes are the latest thing. AI generated fakes. All of this is just going to make life extremely complicated. And I don't know how we are going to keep pace with the rate at which frauds and new sorts of frauds are getting created. So it's a battle of AI. We keep fighting every day.
Yeah.
Dangerous side of AI.
Yes, exactly. Yes. So, thank you for answering that question. That really helps out in averting these players in the market. So, let's have another question here from Alok. Can you please elaborate on the efforts required by the BFSI companies to improve the understanding of personal finance among the masses as well?
It's a very interesting question. Actually, I deeply believe that this can't be left to BFSI sector. Personal education of financial matters or financial education, whichever way you want to put it, is something that I think needs to go into curriculum at school level. Our kids pass out. I see my kid who's passed out from college has started working for the last 2-3 years. He's a lawyer with a top firm in India, and his understanding of financial matters is so poor that it's not funny. And this, when he's lived in a household which has dealt with nothing but finance his entire life, right? So I just think our education system first needs to recognize this reality that if we want to uplift India, if we want to help India deal with its finances better, it has to start at school level. You can't learn, and the entire country can't learn by trial and error. मैं कुछ पैसा लगाऊंगा, फिर मेरे पैसों का नुकसान होगा, फिर मेरे 2 थप्पड़ पड़ेंगे, फिर मैं सीखूंगा कि नहीं, ये नहीं करना चाहिए था. This is not the way people can learn, but unfortunately, that is what happens in our country. This is how people learn about finances. All of us make mistakes. That's what Arun and I were discussing earlier, right? All of us make mistakes, and all of us then learn from those mistakes. But why should we? So I think first and foremost, even before BFSI, uh, I think we need to relook completely at education and education, especially classes, let's say 8th, 9th, 10th onwards.
Yeah.
Right? At that level, if we start teaching our kids how to manage personal finances a little bit better, it would really help. And then over a period of time, look, we do a lot of education. We go to companies, we do educational sessions in companies and so on and so forth. But I can only cover so much. At the end of the day, there may be 1,000 operating NBFCs in this country, and there are 23 life insurance companies, and there are 50 mutual funds. How much can we cover?
Yeah.
We will do whatever it is. I think mutual funds do a tremendous bit with their mutual fund Saniya concept, right? And it's a great concept to teach people, but I don't think it's that alone is going to change. I think fundamentally the structure of education needs to change in order for people to be a little bit more uh, at ease with finance. There are so many people that I meet. I start talking about even slightly complex financial terms, and their eyes glaze over and they look like they'll fall asleep. We have to change that.
That's a music to our ears, and you endorsing these views at FPSB. I think we also talk about this all along, that financial planning or financial skills should be it should start at the primary level or at least the 8th, 9th level. And I think we are trying to do something. We are trying to meet the relevant people, and maybe at some point of time we'll brief you also. But that's a great endorsement from you. Thank you. Yes, Saniya, next question. Yeah.
Yes, indeed. We have another question from Krishna Mohan. This is interesting. Does a super HNI require insurance? Do they require insurance?
Depends. Yes and no. I have sold to a lot of super HNIs. So, for example, let me give you a classical case of a super HNI, which I did many, many years ago. Life insurance as a tool of asset division in a super HNI family. So, I had a client many, many years ago who had two kids, a son and a daughter, businessman running a business. And the way we worked with him was to say, let's say your son is going to inherit your business, which is say 100 crores, but he was very clear that he wanted to equally leave money for his daughter. And so what we did was we created a life insurance policy of a very large amount, which was in which the daughter was the nominee. And so that's now an asset creation that is happening at a very small premium level every year for the daughter to have a sizable chunk of wealth. So actually, what this person is, instead of dividing 100 into two portions and giving each, what have you done? A super HNI has created more asset out of his existing stream of income, right? And it especially works very well for people who are slightly older, people in the 40s and 50s. The premium is a little bit more, but it's a great tool that people use for asset creation and asset division. There are a lot of people who have used, let's say, something like Married Women Protection Act to create a set of asset for their family, which is completely protected from the debtors or from the lenders rather, right? Especially if you're a highly leveraged family, then you use MWPA and create an asset that is protected from your lenders. So there are many use cases. People use life insurance in very, very creative ways. And super HNIs also use, currently, our Indian laws don't allow us to do a few things, like, for example, create a structured product kind of a structure within a life insurance policy, which happens, for example, in markets abroad. You can create super leverage policies and so on and so forth. We don't have that in India yet. But yes, I think even within the laws that we have, there are many use cases for super HNIs to use life insurance to full effect and multiply their benefits.
Arun, so you would like to add something here?
No, I think he has very well explained it, and in his domain, I think obviously he has covered almost all points. So I don't think to add, I should add anything here.
Yeah,
Move on to the next question.
let's move on to the next question. It's from an anonymous attendee. Could you please share your future outlook on insurance sector as it's going digital, wherein companies are selling insurance directly through their portal versus selling through insurance advisors?
Okay, this is an interesting one, and my views in this are a little bit not in sync with what a lot of people believe. Um, Let me put it this way: what do you buy on internet, or what does a direct to consumer brand stand for? A direct to consumer brand stands for a very easily communicable, very simple proposition, and usually direct to customer benefits are accrued in terms of savings by not going through a particular channel. Now, unfortunately, at least in life insurance, I am yet to meet somebody after 25 years of this business who got up today morning and said, "Today I will buy life insurance." मैंने तो नहीं देखा वो आदमी आज तक जिसने सुबह खड़े होकर बोला कि मुझे आज लाइफ इंश्योरेंस
Absolutely right. Absolutely right. Yeah.
right. So it is a need that is there. It is not a perceived need. It is a latent need. The latent need has to be aroused. As financial literacy gets better, there will be some people who will be very aware of the risk and how they need to buy insurance. But at the best of times, even in the most advanced countries, this does not amount to more than 5 to 7% of the population, right? So for the rest of this population, internet or information on the internet will become a great way to compare. But to construct the right product for you, to put together the right amount of product for you, I don't think advisors are going away. My reading is that at the best of times, direct to consumer insurance selling will never account to more than 8 to 10% of our industry. Today, it is about 4%. It's a very large base. So, by itself, a 10% share of the life insurance industry is a humongous industry by itself, right? Because we are talking of a few lakh crores of premium every year. So, even a 10% of that is a very, very large number, will sustain a lot of companies. But the majority of people, for the near foreseeable future, I think will continue to buy from distributors. Now, within that, however, technology has a very large role to play. Because one of the things that has happened is insurance products over a period of time have proliferated. There are a lot more products, right? And as sellers, it is very hard for us to remember which product has which feature and so on and so forth. Even if I represent just one company, now imagine the complexity if you're working with 3 or 4 or 5 different companies and doing this.
Yeah.
Technology there can help the distributor recommend the right product based on whatever the customer requires. That is where a big sea change, I think, will happen with technology. At Edelweiss Tokio Life, we've just created a new tool called U2, which is not named after the band, but basically means U square you and your family. Sorry, to get away from that. So U2 basically looks at all the needs and then puts together a recommendation for the buyer, which is based on a mix and match of the various policies. So if, for example, your needs need cash flows at different points of time, maybe one product is not good enough to meet all those requirements. So you too will go through our database, look at your needs, and create the right cash flow. And I keep repeating that. At the end of the day, you call life insurance whatever you want. Life insurance is nothing but a set of cash flows. That's all that it is. You give money, you receive money. The best outcome is you receive money when you need the money. The worst outcome is you don't need the money, you receive money, or you need the money and you don't receive money. Those are the worst outcomes, right?
Yes.
So I think where technology will make a lot of difference is in creating what I call this personalization, because this this mixing of products and creating the right financial cash flows for a customer is what I would call almost ultra personalization. And that is where a lot of things will change. So technology will make a lot of it. And to that extent, therefore, technology will help distributors sell even more. Because customers may still struggle to understand that on their own. But a distributor with help from technology can create far better suited products than customers may be able to do on their own. So actually, I think the coming wave of technology should help distributors become better, should help distributors service their customers better, meet their needs better, and be able to reap the benefits of this technology far, far more than almost anybody else.
So Saniya, I think you can take one more question, because
Yeah.
otherwise what we can do is we can collect this question and send it to him later, but at least you can add one or two more question max.
Sure, this
We're
is
almost
something
at
that
5.
I would personally like to ask. Were there any key moments or any influential figures in your early life that influenced you to take this path?
The path of life insurance, you mean?
Insurance, yes, life insurance.
Actually, I don't want to manufacture an answer, so I'll be candid. No, I came into life insurance for a very simple reason. I had been in banking for the first 6, 7 years of my life. I had been very, very fortunate to work with a bunch of very, very smart people. Those people that I worked with in the early part of my career have been very, very influential in helping me get where I am today. Because at a very early age, they taught me how to question things and they taught me how to look at business. So back in 99, 2000, when the sector was just opening up, it looked like कि अगर career का आगे का path अच्छा बनाना, तो you should go to some place where there are lots of new opportunities. And banking, in those days, I used to be in a foreign bank. It had become very clear that India uh, will be a difficult place for foreign banks to work in as private sector Indian banks start becoming bigger. The HDFCs, the ICICIs of the world were just beginning to gobble up real estate in terms of customer mind space. And it was very kind of visible to me that banking and foreign banking is not going to do very well, especially in the retail space, which is where I was. So insurance was the rising sun in the financial services industry. And the only thought in my head was that I should get onto this bandwagon and take the benefit of this bandwagon. But having said that, once I joined my first company in life insurance, which was Max Life Insurance, I met a gentleman called Paul Kolgar. Paul was from New York Life, and he was the first head of distribution for Max New York Life in those days in India. All, I think what Paul taught us in those 2 years that I worked with him on the need for life insurance, on how life insurance helps people, on how to help people understand life insurance, the sheer passion that he brought with him. He had spent his 50 years of his life selling life insurance. When I met Paul, he was in his late 60s. He had started out as a life insurance agent at the age of 17 or 18. And 50 years he had spent just doing this. And his passion for it was amazing, absolutely amazing. And so in a lot of ways, whatever I've been able to achieve in this business over the last 23, 24 years is all thanks to Paul and his very, very infectious spirit and belief in life insurance. Had Paul not been there, I don't know whether I would have even lasted in this space. I think I would have, but Paul made it very easy for me. So yeah, a lot of credit to Paul for what he taught me in those early days.
Thank you, Sumit. That was a really interesting story to get it out from you. Thanks for being candid about it. And Arun sir, would you like to say a few
I
words
think on
before
this note, I think we should close it. As I said, there are a lot of questions, and we can collect those questions, and we can
Yes.
definitely send him. And we
Yes,
have
we can.
noted your interest in CFP and your love for CFP qualification. And obviously, we would come
हाँ,
back.
but आपको बहुत इंटेलिजेंट लोग चाहिए अरुण. मैं तो बड़ी मीडियोकर इंटेलिजेंस वाला हूँ.
नहीं
मेरे
नहीं
पास ही नहीं
हम
होगा.
अरे आप you are being very modest. You have to just give us some time, so we will
Yes.
get you in the community. And thank you again, once again, for your time. I think everybody loved it, and we would call you again for sure. Thank you
Definitely.
so
Certainly,
much.
my pleasure to be here. Always a pleasure to be on a platform with fellow professionals from the financial services world, and happy to be here, like I said. And thank you for having me here.
Thank you both for your invaluable contributions to our webinar today. We look forward to implementing the wisdom gained from you and your shared experiences into our professional endeavors. And before we wrap up our today's session, I'd also like to extend a heartfelt thank you to Arun Thukral for expertly guiding our conversation and enriching our understanding of Sumit Rai's journey. And to our esteemed guest speaker, Sumit Rai, it was a pleasure meeting you, sir. A sincere expression of gratitude for sharing your wealth of experience and insights with us. And now, as we conclude, I want to remind you all that this webinar will be a lasting resource for your personal professional development, and it will be uploaded to the FPSB India YouTube channel for your reference. And additionally, for our CFP professionals, this webinar will also be available on your LMS platform. By participating in a quick quiz based on the webinar, you can earn 2 CPD points, further enriching your experience in this field. So thank you once again for joining us today. See you next time. Thank you so much, sir.
Thank you, everyone.
Thank you, Arun. Thank you, Saniya. Thank you so much.
Thank you. Bye.